Thank you, everyone. Thank you for being here. Okay, so this is going to be a lot of numbers, and I hope as more people trickle in, they will enjoy it. You can follow me at @OneBaseMoney. At @OneBaseMoney. I'm on all platforms, Nostr, everything. Okay, so what I'm going to do in this presentation is I want to show you a selection of different TradFi markets and show you the actual trend that those markets work on, the scientific trend, okay? So they're going to a bunch of slides coming up just like this. It's a 25-year history, goes back to December 1999, but the first line you see, the green line, is the 1969 trend, all right? So basically when the gold standard was collapsing, moving into a full fiat world, all right? So that's what the S&P trend actually looked like for 50 years, all right? Compound growth of that trend, the slope of that curve, 8.1%. And if you project that out, this might not mean as much right now, but I'll explain in a second. If you project that out to 2030, 7,904 for the S&P. All right, now, another trend, and I'm going to do this for a couple slides, is just to look at since Bitcoin started. All right, so I'm going to start it in December 2008 and look at how the actual S&P grew there. Okay, so that's the December 2008 trend, the slope of that curve, 11.6%, all right? So this is a typical thing that fund managers will say, basically, 7 and 9, 8 and 10. Basically, they're saying 8% return per year, plus if you reinvest those dividends, you might get another 2%, all right? So the 8% is a long-term trend, but actually stocks since 2008, even a bit higher, 11.6%, and this is without dividends, okay? Project it out, we'll get to that. All right, now gold, Peter Schiff's favorite. This is the gold price. People probably know this in Bitcoin space. Gold has been screaming in the past 2 years, so it looks pretty high, but this trend is actually the 55-year trend of gold. What is the slope of that green line? 5.5%. Now, of course, look, you can, with gold, it actually looks worse than the S&P. Like, there was a huge bear market in the 2000s, the 1990s into the 2000s. But basically, what that's saying, that 5.5%, is if you bought and sold around the green line, then you get 5.5% year-on-year return. All right, so what has Peter Schiff's favorite asset done since 2008, since Bitcoin was around? I'm sorry, the projection out to 2030, I always forget that part, 27,800. Now the 2008 trend, okay? See, the gold, again, is above trend, but the slope, because gold has basically moved sideways for the last 15 years that Bitcoin has been around, slope is actually worse, 4.1%. It's a different analysis to do, the ranges, 3 standard deviations above, all that stuff, just basic trends here. 4.1% is what gold returned since 2008. Yes, it's above that now if you've been holding gold, but that is the trend nonetheless. All right, projected to 2030, gold price on that trend, $2,589. I'm not saying that's what it's going to be, but that's the regression, simple regression analysis. Okay, next one, bonds. This is quickly. All right, we got stocks, obviously, we did gold, let's do bonds. Bonds are hard to do because you have a coupon payment, different prices, yields change all the time. I actually need a bond index. The best bond index, the oldest one in the US is this one, the Bloomberg Barclays Index since 1975. What's the slope of the trend? 7%. Bonds were very high interest payments in the 80s and 90s, okay? This is hard to understand for an index, but it projects out. It's 2,200 is the index now, projects out to 5,500 in 2030. Since the ZIRP, that is zero interest rate policy, has been in effect, or negative interest rate for central banks around the world since 2008, bonds have done even worse. What's the slope of that trend? 2.4%, all right? And again, the index itself right now is 2,200. By 2030, 2,700, if you're counting. All right, GDP. Another one just really quickly for GDP. Let's look at the slope of this trend from 1969, 5.9%. GDP is a flow. It's not a stock like the other things. It's not a supply. It's an annual flow, but at least this is the churn. Of course, there's inflation baked into this number, 5.9%. 48 trillion is projected by 2030. That's a bit more interesting number, right? So 29 trillion is the GDP now. But if you look at that trend, we've been under that for a long time. Doesn't seem like we're really going to hit that. So what's the 2008 trend? This is something more accurate, perhaps. 4.5%. Projected 2030, 35 trillion GDP. Again, we'll get through this. We're almost done with these ones, but I just want to show you a bunch of exponential curves. The last one is the monetary base. I've been doing this research for about 7 years now. I do quarterly updates. This is the most analogous money supply to Bitcoin. This is central bank money all around the world. Okay, so euros, yen, yuan, sterling, Swiss franc, all the rest. $26 trillion at the moment. 26.8 trillion. You see that it's actually way under trend. Trend is 35 trillion in the past 55 years. Slope of that is 10.2%. And actually, if you did it natively, which is a bit complicated for this presentation, it's even higher. But since all currencies lose value against the dollar as well, it's lower, so it's 10.2%. 60 trillion global money supply. You can think about that, this number now when you think of Bitcoin market cap. 60 trillion by 2030 is the trend, the exponential trend. Now let's look at the 2008 trend. Even here, interestingly, the dollar is the best looking horse in the glue factory. So what you see when you see a lower trend here is actually other currencies losing value against the dollar. Let's project this out. The trend from 2008 is an 8% per year trend. Projected to 2030, 51 trillion. So some big, some big ranges, but you're getting an idea of where the economy was going. All right. So what I just showed you, hopefully, would make you an expert on Bloomberg News, what they talk about all day, every day. This is basically how TradFi works. It's exponential growth. You put it on log scale, the trend is a straight line, and that's how it looks. You can compare these trends. You might be able to catch the stock market when it was bottomed at 666 in March 2009. Then you got closer to an 11% S&P return without reinvesting your dividends. Or maybe you would have gone into bonds from excess safety and had a really low 2.4%. Again, this is just aggregate US bond index. But by and large, we can say that TradFi will give you 5 to 10% per year. 5 to 10% per year. You hear this from portfolio managers, all the rest. Now, I want to show you what Bitcoin does. This is another thing that I've actually been doing for a long time. Oh, sorry. I keep forgetting my prompts here. This is TradFi. This is TradFi. And again, just to drill in the exercise, the straight lines on log scale, that is exponential growth. Another word for that is constant growth. So everybody's always fighting to get this 5 to 10%. And I'm not even measuring price inflation, whatever. Everybody has their own calculations. Everybody knows this is difficult. But 5 to 10% is what most markets will get you, and you don't even need to watch Bloomberg. You don't need to watch CNBC to what the price of oil is doing tomorrow. These are the ranges. These are the main trends. Now Bitcoin. If you noticed, all the charts that I showed you for this chart were on log scale. All right, so there's order of magnitude higher each level up you went. But they were all straight lines. Bitcoin, if you fit it scientifically, is not. So Bitcoin actually follows what is called a power curve, a power regression. And it is different, all right? Let me show you. Now, there's going to be a lot that's going to come on here, but I'm going to try to talk through each line, okay? So first thing is it's not constant. But look at the trend itself. Bitcoin price, I had to snap this a week ago. Snapshot, 105,999 Bitcoin. The trend itself, 103,000. It's a pretty good looking trend. I calculated that, but I didn't do anything. That is the actual trend price. All right? As I said, it's not a straight line, so there's something else going on here. And it's not constant. It's just not constant. So let's analyze a little bit further. The black line is the percent return of the power curve, of the power regression. On the right axis, compound returns per annum. And as you can see, obviously, if you got into Bitcoin at $1 or under $1 or a euro or whatever, your return's going to be pretty big. Started up close to 200% per year. and that would be your compound return. But as the price rises on this power scale, of course, your return is going to go down. And today, you can see what it says there in the tooltip, 42.2%. That is actually the slope of the curve today. 42.2%. That is the growth of the Bitcoin price right now. Project the power curve out. Remember I did the projections for all the other exponential things. It's a good number. It's a good number. I'm not saying it's going to happen, but it's a good number. But I will try to, again, just show why, if you haven't seen the power curve, if you hadn't seen tweets about it, why it is interesting. Because it's not a constant growth thing. It's more of a network growth. Networks grow in power. So as it says there, if the BTC life extends 12.7%, all right, there's about 6,000 days in Bitcoin so far, 6,000 days. So if we go another 700 days, roughly, the price doubles. That's what this says. And it's not about price, it's not about checking, if you can time the market. That's, a lot of people do that. I'm just more interested in sort of the nature of it. My interpretation of this is adoption doubles. Adoption doubles. And networks grow in power, which I'll explain more in a second. But basically, yeah, if it grows, the life of Bitcoin extends 12.7%, that means the days of Bitcoin expand, adoption doubles. That's what I'm observing. 2016 projection, okay, you see this number, 2016 projection until today, $109,000 Bitcoin. I actually started plotting the power curve stuff, which I'll show you, in 2018. When I say in green there, and there's a lot of stuff on this chart now, that the 2016 projection would get you today 109,000. It means you only take the pricing data of Bitcoin from the beginning until 2016, and then you just stop. You let the regression run, you let those lines go out. So what you see on the chart, the 105,000, 103,000, 42.2%, that's all time data from 2009 until today, 2025. But if we even stopped calculating this in 2016, and we projected that green line out, it would project $109,000 Bitcoin. That is 54 times better than the 2020 stock to flow, very creative number. It's 7 times better than the 2019 stock to flow number. So it is an unbelievable projection, actually, of what Bitcoin is doing. I'm not saying I know what the price is going to be at any given day, but it's an unbelievable projection. To summarize what I've tried to say here, exponential growth is TradFi. Very simple. It's what your stock broker tells you they want, 5.10% per year, constantly, which means the trend, if you just do that, it's simple math, the trend of anything I just showed you will go up 1.3x or 1.7x by 2030. Very simple. Bitcoin is power. It's a network. It's a different sort of distribution. For every 12.7% in additional time that the Bitcoin network is around, as I said, currently about 760 days is 12.7% of Bitcoin's additional life would need to come on. Adoption price will double. And you can calculate that. That's a 5.5x growth by 2030. This is a real tweet. This was from 2018. This is the first time I posted about the power curve. So just so you know, I've been around the space talking about this stuff. Still have a marketing budget at about $0, so it's totally fine if you haven't heard about it yet. It's not about predicting where the price is going to be at any given time, just trying to understand what's happening. And if you scientifically run these regressions, it looks very different than TradFi. So if you compare Bitcoin to stocks or even the money supply, it's actually a different thing going on. You don't have to take my word for it. A scientist named Jeffrey West has a great book, Scale. If you haven't heard of it, I highly recommend it. He breaks down how the power regression, the power effect, scales across different things like organisms growing or cities growing. We often think the population grows in exponential. On the city level, it doesn't. It grows in power. Like cities don't just explode into the sun, but we have, certain people need to drive, certain people take public transport. It's a very interesting scaling mechanism. Bitcoin is a network. Bitcoin's going to scale differently than other things in the TradFi corporate world. The bottom line there. All right, so one thing, just to bring it all back together, we've talked about being a Bloomberg expert now, we've talked about Bitcoin, but if we can bring it all back together, I showed you this. This is the analogous fiat money supply. It's the base money supply. I publish this every quarter. It's about 26 trillion now. It is low. Pre-COVID, it was 20 trillion. After all the COVID stimulus, by the end of 2021, it was 30 trillion. Now it's down to 26 trillion. All right, so they've actually pulled it back a lot. Contrary to what you might have heard, they actually are not printing at a central bank level at the moment. Doesn't mean that's going to continue. That's just where it is. It's where it is. All right? But this is what Bitcoin is compared to. So let's compare the Bitcoin Power Network with the rest of TradFi as an exponential phenomenon. And we'll get this chart. This is my real Bitcoin dominance index. Basically, if you add the fiat money supply, the gold money supply, which is about 20 trillion, and even the silver money supply I throw in there. Silver, no central banks hold silver, but it's still old money. You get to a value, it's about 43 trillion right now. In US dollar evaluation terms, 43 trillion. Bitcoin network, 2 trillion, roughly 5%. Roughly 5%. But we can project these out. Notice now, I project out both the exponential curve for all the TradFi stuff, that's the green line, the power curve for Bitcoin, that's the black line, and then the percentage or the dominance. 5% now, where do we cross? Where do we cross? It's just a calculation. Sorry, I keep forgetting my prompts. 43 trillion is current, Bitcoin 4.8% of it. Where do we cross? 2043. 2043 is my estimate, and I will explain more. I'm not just saying this is definitely going to happen, but that's the estimate based on this. Crosses at 155 trillion. Interesting. So even though a lot of people, when they use 100 trillion, they're talking about broad money, it has nothing to do with Bitcoin. We might actually be around this 155 trillion where we meet. But another thing still, that doesn't mean that all the TradFi stuff is gone. All the gold is gone. It's still there. It's just 50-50 because it's 100%. The main point of showing you this slide, to bring it all together, is just to say that I think before 2043, probably sooner, probably two halvings from now, it's going to get a lot more real than philosophical. I'm not a big hyper-Bitcoinization guy. I'm not going to be complaining if it happens. But I think that this sort of a trend that we see is going to slowly take hold, and probably two to three halvings, we'll see something that might look like Bitcoin denominization, a Bitcoin standard. But again, I can't predict exactly. But this is what the numbers tell us. These are the trends. And do with that what you will. Thank you very much. You can find all the info on my website as well.
Secure your BTC Prague 2026 ticket at the lowest possible price now.